Inflation seems to be rising in the three major economies of East Africa, but the ones really feeling the pressure are Kenya and Uganda. Why is that?
Well, as you mentioned in the insert, we've seen some very strong rises in inflation. In fact, in Uganda, hitting an 18-year high. In Kenya, for example, 3 times higher than the government's target range for inflation. So there are tremendous concerns there. There's a number of causes. I think the most predominant one, and this is something that, of course, all of us are very much aware of, is the drought in the Horn and throughout East Africa, which has severely affected food prices. And of course, throughout these economies, food is the greatest contributor to the CPI basket. Last year or 2 years ago, we saw the Kenyan authorities adjusting the CPI basket to give food a slightly lower weighting, but at the same time, it is still the largest component of inflation in that economy, and certainly the same is true for Uganda. Meanwhile, we've also seen the depreciation of the Kenyan and Ugandan currencies, as well as in Tanzania. In fact, Uganda's currency is the worst performing African currency this year, and Kenya's is the second worst. And this is, of course, for oil importing nations and for generally nations which running large trade deficits. It does exert some fairly profound pressure on the cost of imports, which of course then carries through into the inflation environment that you see. And then there's a number of other factors which have played a role, but certainly rising food and fuel prices in these economies, as well as dollar demand from local manufacturers and the energy sector, for example, in Uganda, has certainly had an effect on the weakness of the currencies and conversely on inflation. So
Simon,
we've seen a lot of pressure there, and of course the governments are trying to intervene to ameliorate that.
Simon, let's hone in on Uganda. Inflation for August at over 21%. As you said, the currency really severely battered, over 2,850 against the dollar. Now, the interesting thing is that this is the one country that's been regarded as one of the fastest growing African countries. People so excited about oil potentially coming on stream going forward. Does this in any way temper that kind of enthusiasm?
Overall, we don't expect the inflation situation to substantially alter Uganda's economic growth prospects. You mentioned oil. Of course, oil investments in the economy have continued to be robust. Those are not going to be affected by what we're seeing in the inflation environment. And equally, we've seen quite a strong rise in credit extension to the private sector in Uganda, which does show some appetite from that area of the economy, which is very positive. It will certainly affect consumer spending, and that is an area, of course, that the government is worried about, and it will impact growth. But we don't anticipate that impact to be as seismic as some have suggested, and we're still very bullish on Uganda's overall growth prospects.
Kenya inflation coming in at 16.6 in the month of August. The central bank has taken numerous monetary policy measures, the most significant being the changing of the discount lending rate in the interbank market. They're trying to deal with the cash crunch that we're seeing, but they raise one day, they drop the next day, then they move to a moving average the next day. It's just a flip-flop, and there's just a sense that the central bank's lost its credibility. What's your view?
I wouldn't say it's lost its credibility. I think it's a difficult environment in which it's operating. Certainly it has created some uncertainty in the market, and that's been a challenge. I think the interbank rate particularly, while it did immediately stem the depreciation of the shilling, we also see the likelihood of that transmitting into higher lending costs for consumers. So commercial banks may have to, because of the cost of borrowing that money, they may have to pass on that cost to consumers, and that's a concern in terms of the effect that may have on the Kenyan economy as a whole. And we did see some of that in the immediate kind of aftermath of the economic crisis in 2008 and 9. We saw some of the effect of commercial banks high lending to the consumer public and reticence to lend in general. So that's a concern, but certainly it's been a difficult environment in which to operate. And the central bank, of course, has been hamstrung in the sense that it's very difficult, certainly when the major causes of this inflation rise are endogenous factors, particularly the drought, which it doesn't have much control over.
And very briefly, what does it mean when the two leading economies of the 5-member East African community are feeling this huge pressure of inflation, seeing their currencies volatile and having growth a little bit constrained? What bearing does that have on the rest of the region?
Well, I think certainly it will have a bearing. You look at Rwanda, particularly, it's a landlocked country. Certainly its agricultural sector has performed better than perhaps the other ones in the region, but at the same time is heavily reliant on its neighboring partners, Tanzania and Uganda particularly, as well as Kenya, which has the port infrastructure for its imports. So the cost of imports in Rwanda, for example, will certainly have increased as well, and that will have added some pressure. But the Rwandan situation has not been as dire as the rest of the market, and intra-regional East African trade volumes that we have seen manifest in the last 3 to 5 years seem to have remained fairly robust in the period under concern. And as a result, these smaller economies haven't suffered the fallout that perhaps could have been anticipated. But certainly, Uganda and Kenya suffering from these challenges, and the Tanzanian shilling is the third worst performing currency in Africa this year. So it's across the board in East Africa, and it certainly is providing some pressure to consumers within those markets.